now, and that tells me that there's the stocks are buckling a little bit. We had lower lows in the S&P, which puts the yellow light on some.
Bitcoin below Good afternoon. Welcome to Chicago Future of Finance. I'm Oliver Renick. It's Tuesday. It's 2 p.m. We're down here at the Cboe floor in Chicago where there is some action. VIX popping to 20. Bitcoin continuing to get hammered. BTC kind of story of the day as we are now below the price it traded at Trump election part 2. Stocks are kind of hanging in the balance. I do have a few important updates to the risk radar right off the bat here, given that where we left Thursday, I outlined some clear levels upon which the risk radar would change. And we pretty much hit them across the board. Yellow for stocks because we did make a lower low, but we have not really broken down in a major way. Brent Kochuba on the show has been talking about the risk of spasms in the market. I think that's probably the best way to describe this, is it still looks like a spasm. And there are pockets of risk appetite. Look at gold still hanging in there today, hanging on to the green light because it didn't really make a new lower low, I don't think, compared to the levels that really matter. Dollar and bonds are kind of stable right now, even though both of them had broke down. And Bitcoin is back red, as I talked about the risk of it breaking 80,000 and moving to 60K in a hurry. So let's look at the chart here. Firstly, look at the Bitcoin chart over the last 3 years. This is really important. That yellow line, which I put out really a while back and reiterated last week, has broken down. That's 80,000 on the chart. Here's the week of the election. In 2024, you can see the gap up on the expectations that the government and the Republican Party was going to be not just a supporter, but a buyer of coins. Lo and behold, they've been a seller. And here's what I mean by that. There was no Bitcoin treasury that was ever made. That was always a far cry, but it left hopes on the table that coiners would get some incremental next massive institutional buyer from the government. Some of that support did indeed help set the baseline for speculation that drove the price of Bitcoin up, but it still stayed within the realm of the bearish divergence, as I've talked about many times before. The fact that this made new highs on a lower RSI meant that we were losing momentum in the chart, and of course that held up pretty well. But what's key here also is that we're now trading below Michael Saylor, aka Michael's Strategies, break-even point, so their entire thesis of the Bitcoin treasury is underwater. The line that I see on the chart that looks like it could be tested is 60,000, but we'll see how nasty the selling gets. This has already been a major breakdown. Now, if you look at stocks, it's a little bit more calm. We've obviously had a little bit of a range that's developed here. This is still the weekly chart, and it does look like it's plateaued. You can see a bit of a bearish divergence on the RSI here on the bottom panel for the S&P 500 as well. Lower highs and the relative strength despite higher highs in the stock market, as we did put in records. So it's hard to get too worried when you're at records, which is why I've got the yellow light on for stocks. However, that being said, any further weakness here in some of the key names could be a problem. What happens if we don't get a big success from any of the major tech earnings that are left? Maybe you have a further breakdown. We'll talk about those levels with Brent here in a moment and our guests on the show. We've got a great show coming up with Pete Najarian as well, Chris Brecher and Scott Bauer joining me. The candle's pretty big in the S&P 500 today. It does engulf a couple sessions, so I don't like that, which is why I think you have to respect the technicals and have a yellow light for the S&P 500 for now. Nvidia also below 180. I don't like either, but that's still within a range. So there's a lot of things here that are in a range, and if you zoom out to the broader semiconductor group, we are making a few lower lows and lower highs in the last 3 days, but generally a trend still up and to the right. Don't want to see SMH trade too far below 390 bucks, or then maybe we do need to put the red light on stocks. But here's the other thing. I do think that the activity in gold and the metals still reflects some lingering risk appetite. The reason for that is that if you look at the chart of gold or silver at this point, it's too volatile to call it a safe asset. So the fact that it still is getting a bid today tells us that the risk appetite just has moved over a little bit. People willing to buy the dip on something that just wiped out 30% of value overnight in silver tells you that we're not exactly running for the hills out of fear just yet. So that's kind of the main thought that I've got in terms of the overall session, is that it's not ideal, but it also could be plenty worse. So the gold light stays on, and that's green because the trend here still looks up. But you've got a lot of red here on risks on the macro side that could create some problems. Namely, if we have stocks turn further south, then you could really have some momentum that bends downward for us, and that's not going to be good for the overall situation for the market or for the economy, given just how many people now are invested in stocks, record household ownership of U.S. equities. In terms of the calendar, there's not a whole lot that's coming up here over the next few sessions. You do get data later on in the week from jobless claims, which of course is always interesting. and you've got employment on Friday, but we'll see what we get on that front. There's still data that are coming in slow, if they are. So the potential for the market to really pick a direction based on economic data, I think is still pretty slight right now. Jobless claims expected on Thursday. I think as long as you stay in that range above 200,000, if we were to dip below that, obviously that would be a good thing. But right now, the situation for the U.S. equity market, I think, is largely one of momentum and one of generally lingering risk appetite. So it definitely could be worse. I think in terms of monitoring the news flow, there's also a lot in terms of Fed speak and what we need to monitor on that front. Obviously, the story is we're getting a new Fed chair, and that could be a bit of a hiccup for markets if something that's been predictable and good suddenly changes to unpredictable. I have viewed the potential for a new Fed chair as a risk to the market. Notable tomorrow, watch for ISM services. The last print that came above 54 was pretty darn good. That's encouraging to see that. I think for sure the fact that we were able to hold above 50 for ISM services is very good. Also raises the risk potentially that you do get bonds to start selling off again if it comes in nicely. But at this point, good economic data will be welcome. What's interesting about the bond market, and the reason why I've got a red light on bonds, is because even on a day where you have some risk off happening, bonds really are not getting bid. In fact, the 10-year is slightly up on the day, and the futures are little changed in the ZN contract. So the 4.28 that's in the 10-year right now tells us, I think, the bonds are pretty ready to sell off. If you can't get a bid into bonds while the market is under pressure from crypto to stocks, then it doesn't look like there's much of a bid for bonds lingering whatsoever at this point. So that's the open. We'll be right back. We'll talk some levels, talk some volatility with Brent. 2-minute innovator buffer break. Back in a moment.
Hey, Oliver. I'm not sure if you can hear me. I have some audio issues here. I can't make you out.
Yo, Brent, I hear you good. That might have been on me.
Must be running one of those software stocks right now that's crashing, man.
That's getting hammered.
Why
yeah,
they're out. Get rid of them.
you've been telling us about spasms. Looking for it, Brent. By the way, to your point, just for some reference, people get your joke here. The software group is just getting absolutely obliterated right now. Okay, so tell me what's going on here. We got VIX 20. We got Bitcoin below the Trump level. I mean, it does seem like some things here are really under some stress.
Yeah, and I got to be honest with you, Oliver. We were calling for spasms and just saying like this is an unstable regime. I actually did some back tests in this is proof of back testing. I did some back tests here, and I looked at we have this incredible intraday volatility. On Thursday, we were down like 1.6% overnight. We rallied all the way back. Intraday, we had another 1% swoon. On Sunday night into this morning, on Monday, we were down 1.6%. Market rips, right? We go all the way up to 7,000. And I said, this is wild, like the amount of intraday volatility compared to the close-to-close vol, right? This is one of 76 days in the last 5 years that intraday vol is bigger than the close-to-close vol. So it's a real bizarre market is what the takeaway from that is. But what is also really interesting about this, Oliver, is that the forward returns from these moments when there's a ton of intraday vol but kind of relative stability on a close-to-close basis, the forward returns are actually really, really strong. And so kind of crazy me, after we go complaining about spasms, we say, hey, look, like there's some stability that seems like it's in this market. Forward returns are really positive with no real tails in this weird, wacky environment. And then today, obviously, we just had a completely, a large liquidation break, and people are pointing to the software stocks right now because there's a lot of investors in these software stocks that are now worried they may not get their money back. Is kind of the clean way to look at that. You look at some of these BDCs, business development companies, and they're just getting, murked is the term I like to use for it, because, there's no bid in a lot of these names. And so when you look at like a SAP, or if you just look at the IGV, which is the software ETF, that thing is a real loss of confidence.
Down
now, Bitcoin is another one,
today.
right? I don't know much about quantum computing, right? But it seems like that was bid, and then there's these guys that cracked their keys or whatever, right, with some quantum computers, and now maybe this is uninvestable. It seems to be, those things seem to be linked. But to your point,
that's
as well,
a really good point,
there was a
Brent,
whole government subsidy story here
that fell through. But I love your point about the fact
now
that
we're below the
cloud
level.
is getting hammered.
Yeah, and
those
we're
two
below
very well could be
the
connected.
sailor level and some stuff. So there,
Yeah.
100%, and it's a concern. And if you have not used the Claude bot yet, and it changes names every day, it's incredible, and you can see why these software stocks are feeling the heat. Now, what about gold and silver? Gold and silver puked. You mentioned silver puked on Thursday and Friday, right? And then all of a sudden, it's like the whole world wakes up and is like, what just happened? And these things make me want to pull my hair out, Oliver, because we've been talking about the stuff was broken when it's limit up, right, for about 2 weeks. That's when the thing is broken. Like the mean reversion is just the feature of the thing already being broken, right? And that's kind of like what we're seeing in the market writ large. It's like single stocks are bid. IV rank in S&P was like a 1 last week, which tells you that single stock vol is very high. The index vol is very low. There's a huge dispersion there, and that creates this instability in the market. Now what you do is you inject the software story of this thing rolling over. Iran seemed to come off the table over the weekend. The Minnesota thing seemed to calm down, and I don't know if that's enough to influence the market, but I think a lot of people are just feeling like the bad vibes off of that, entire situation. And, there's just risk with all that sort of stuff. And that stuff seemed to kind of ease a little bit. So, maybe the software story renews some of these tensions in terms of giving people a reason to sort of sell off some of these single stocks. And the other thing I would just note on this, Oliver, is now you see, VIX like that, bam, 20, right? And what's weird about the VIX kind of spiking that quickly is this is a very still, like at the money implied vol in the S&P is still kind of weak. It's not really materially bid. So there's a lot of things in the volatility market that just aren't really lining up, like not all squaring up. And I think the result is just this really crazy kind of movement that we're seeing where intraday vol is huge, and then all of a sudden it's like we rally back, and it's like when you look at it on a close basis, you're like nothing ever happened, right? Like if you're just the dude checking your 401k at the end of the day, you're like, oh, okay, we're down 20 bips, no big deal. Meanwhile, day traders are like, what the heck? We're down 1.6 in the middle of the day, and it's a lot more stressful. It's a very bizarre market, and it remains unstable.
But you've done a pretty good job, I think, highlighting something. Noel, too, credit to him as well. The folks who spend time watching the subgroups of volatility, the different ways to describe volatility. I think everyone at this point has to understand volatility just as a first order, derivative. But this show and what we talk about is oftentimes about those second order ways to think about volatility. Yeah. And talking about correlation versus dispersion is an important one that you've hammered home with us about, and noticing when things get a little bit out of whack. And that core 1M that we've been looking at has been one of those tells. So in many ways, we could still describe this as kind of a normalization of volatility relationships between the single stocks and the index. The index is now catching up to the single stock volatility, which could just be the short-term spasm, and then you kind of return to the grind that we had. Or then maybe it turns into a very high correlation event because judging by Core 1M, it's still not a high correlation event just yet. This is not a dump. VIX 20 is a notable pop, but this is not a super high correlation event. But we are out of that really low correlation level that you were talking about and highlighting to us before.
You're 100% right on that, Oliver. And last week we were talking about how it all seemed like one trade, right? Remember, the dollar was getting just destroyed. You had gold and silver ripping, and then you had bond vol at record low, and then you had these stocks were kind of bid. The dollar did bounce a little bit here, right? And now, so I bring that up because we're getting mean reversion there on the macro side. Gold and silver now mean reversion. You know, that was inevitable, right? Like, you couldn't set your watch as to what moment it was going to happen, but we all knew it was going to happen. So then when it happens, it's like, what are you so surprised about, right? Like, I'm not sitting here saying I shorted gold at that moment, but we all knew it was going to break. Like, it was just a matter of when, right?
And here we talk specifically about the dollar risk too. For the dollar, if it found any life, if the dollar found any life, it was probably going to hit gold, copper, silver. Go ahead, Brent.
Yeah, and that's it, right? Mean reversion in these trades that get stretched. And you see the ivory earrings at 100, right? And you see Core 1M when it breaks all the way down. That's telling you the vol market is off sides, and the options market's so big now that, you know, people still don't want to pay attention to it. And you can point to a signal 20 times now, Oliver, since you and I have been working together, like, this means that something is probably going to break. And then all of a sudden it's like, okay, this isn't a violent 10% drawdown, but these are really abnormal moves that we're seeing here as this kind of back test that we did flags, right? And on that same point, I read probably 5 different bank notes on gold and silver, right? And they talk about the dynamics of money coming into the ETF and break evens and all these other things. Not once do they mention that the silver market, SLV, the ETF, traded almost more options than the spiders last week, right? And if you look at over the last week, gold and silver are bigger in the option space than anything else except for 2 names, spiders and Qs, and that's it. And that's on a 1 week average. So the options market is massive there. There's tons of deltas that are being driven now in that ETF space. And so there is absolutely, in this last kind of push, signals that the U.S. options market, of which SLV and GLD are part of, were wagging that commodity dog in a big way. And so, again, when you get this mean reversion, it's like, look, that was the result of the thing that broke. That is not the breaking. Like, it was broken when we were going limit up every day and stock of vol up. So, you know, that mean reversion and kind of the reason why I kind of pound on the table on this whole thing is because now we're getting these spasms. Like, this is cleaning up that volatility kind of complex. It's just a mess. Right? You want to see that. You want to see that sort of reset, stabilize, normalize, and then all of a sudden what happens? Like, we get a decent amount of positive news, things are fine, VIX goes back to 13, and that's that Vanna pressure that helps the market finally get above that 7,000 level. So, you know, it doesn't also take a genius to see we keep stalling out at 7,000, right? That fuel isn't really there. You kind of need that thing that's going to push us back through. And so, you know, this cleansing is just part of the process, I think. And so, you know, it doesn't really feel good, but it's expected, and also it just sort of makes sense, right? If you've been watching this at all, if you're talking about the options market at all, like it makes sense, right? And so, you know, it's not hard to understand that these vols really need to reset.
No, very well said. In terms of surprises to the news flow as well, Brent, I think it's worth. Before I leave VIX, okay, because I was going to go to the yesterday's industrial data, which I think is important. But look at the VIX too, by the way, because I can't get this out of my head. For all the people that say you can't do technical analysis on VIX, I like to be primitive, Brent. Obviously it changes when something's mean reverting by nature, but it's amazing. This up and to the right line for VIX. I've had this thing for weeks, going back to December. And it keeps going up. When we had stocks up, vol was creeping up. Now we got stocks down, vol's up. It's just like, it's kind of this index trend that, to your point, I think is playing some catch up.
Yes, and I may have been one of those people that threw a shoe at someone doing technical analysis on.
Well,
on the
it's
VIX,
fair.
To your point, it's going up. But the thing that catches my eye there, Oliver, is look at those candles, right? Like, they're big candles here.
Yeah, they are.
Giant moves in VIX volatility space, right? And what is happening in a large way as well, and to sort of throw shade at some of the banks on this, you will see the banks come out and they say there's huge positive gamma that is bringing mean reversion into the market. And what that positive gamma is all 0 DTE or 1 DTE positions, kind of at the most. If you remove that flow, if you take that positioning out, there's no real stability factor in terms of positive gamma outside of this. And the reason I bring this up in relationship to the VIX is the VIX measures 1 month S&P options volatility, right? SPX index options vol is what the VIX is measuring. That has nothing to do with 1 DTE or 0 DTE implied vol. So there's like two markets now that decouple, right? There's what's happening in the 0 DTE space. There's the illusion of stability provided by 0 DTEs. And then guess what happens? A day like today, it's like, oh, 0 DTE is gone. Like, wait, where was all that positive gamma you're talking about? Like, what happened? There wasn't a monthly expiration. Like, no, it's just because it's all 0 DTE and the vol's also decoupled. There's a different relationship now between what happens with like VIX one day and VIX, 1 month, right? There's a spread there. And so, that relationship matters. And again, 60+% of the SPX flow, 85% of NDX flow is in 0 DTE. And so, that is that is what you need to know about the fact that when there's not a big macro event going on, right? If we don't have a war, thank God. If we don't have a credit default crisis, we don't have this thing that people are hedging out in time, then you just get this whipping around in the short dated trading space. It's the HFT thing, it's the quantitative trading thing. And guess what? They're going to throw more 0 DTs on this fire, right? In the single stock space.
Heck
so,
yeah, baby.
It's a tale of two markets is what it is,
Pulling that up here, VIX 1 day, there we go. On Thinkorswim. A lot of big movement there, a lot of candles. It still kind of has that up and to the right, but much more of that daily mean reverting function of volatility. But still, the bigger candles, they're getting bigger in size, they're getting bigger in magnitude, to your point. Brent, as I kind of think to the macro, I want to get your thought real quick before I bring in Pete, who's on deck, about the other potential sources of volatility as we kind of think about the macro regime. Yesterday's ISM manufacturing hit above 50. That hasn't done that consistently for a very long time. I think that also kind of feeds into maybe some of the physical metals. I think it also feeds into the fact that nobody's buying bonds today. VIX is 20, crypto's in the woodshed. Nobody's buying bonds. That tells me that when markets recover, you better watch out. Bonds might be ready to get shredded again. I'll give you last thought.
I can't disagree with that, Oliver. I'm obviously the macro maven over here, but I do think that there is and we saw this in the past, and this is not a political statement. I'm not saying who I do or don't favor in this world, but there is a TDS, like a Trump deranged syndrome in relationship to macro data, I think. And it's like no one wants to believe that maybe the economy turns around. I don't really know if it does, but the numbers keep showing like they're all right. So to your point there, I don't think there's any reason, Spasm, today that you can't come out of this saying, look, maybe the economy is doing all right. Maybe the things that like Besson talks about all the time are coming to fruition and like the economy is doing well. It's like, you got to consider that. CapEx is strong, looks strong. The earnings seem to be okay. I know the earnings results were a little bit mixed. And so, where I'm sitting here, it's like, if we can realign the vols, then what's your reason for, not wanting to think the market drifts up over time, right? It just seems like it's still kind of in that position. There's no Iran war right now, thank God. It seems like the geopolitical front is quieter now than it was 2 weeks ago. Gold and silver now mean reverted a lot. That's not as like crazy. So a lot of these things are sort of like normalizing a little bit. And if we can just get that normalization, a little bit of quiet, then suddenly the VIX can get smacked a little bit, and that can help that Vanna kind of rally recover. So I do think that's an important thing. Last one I'll note here, Oliver, just because it's so interesting. Tesla is one after earnings that the implied vol rank is like a 2 right now, right? And Tesla and Elon's back in the White House now, right? He's loading XAI into the Pentagon servers or whatever he's doing, and like SpaceX and all the other things. That vol is as cheap as it gets, literally. The IV rank is a 1, and that's after earnings with the stock at lows, as you can see there, right? So even though that stock has come down a lot, it's a little bit of a redhead, it's a red herring that the market or that stock is coming down because people aren't buying puts in Tesla at all. I think this is one that if the market gets some traction here, we stay above that 400 level, then you could see this thing really start to kind of like come hot right back out of this. And the vol is so cheap right now, that is why I flag it, right? If you're buying 1 month calls or puts, either one, because the vol is cheap, but particularly the 1 month calls, 25 delta calls, for example, very cheap right now. And so, cheap options, sometimes you take a shot.
Sure, and the chart looks pretty good. Tesla's been kind of an outperformer, hanging on there for the ride. Good stuff. Brent Kochuba, nice perspective. Glad we got you. Appreciate it as always. Nice look at the flows and
Oliver.
good heads up on the potential for spasms in the market. Also like that chart of Tesla there, which is looking pretty good, hanging on. And a chart that's actually found a good bit of support there too, time and again. All right, let's get to Mr. Pete Najarian joining us. Pete, what's up, man? Quite a session here.
I'm doing well, Oliver. This is
lots to
fun,
hit,
man.
man.
This is what the markets are all about, right? Not always going in the same direction, but giving you an opportunity to trade within that and all that. I mean, this is it's been a good trading day already.
We've hit obviously the kind of the normalization of the index vol. Stocks have been going all over the place. That's why we had so much fun trading a bunch of these stocks. But the index had been very peaceful. So the index vol pops. We talked about maybe some macro effects here with the nice industrial number yesterday for PMIs. Tell me what's top of your list, Pete, and kind of thinking about why the market's having this spasm.
Well, you know, I find it really curious about what's going on specifically in the crypto world. I think that space has gotten us into a position now where we're all kind of focused on it at least each and every morning, because it looked like we had bounced and we were starting to go back to the upside, and it's kind of failed, right? I mean, it not kind of failed, it has failed. And so I think that's a bit of a concern. I look at these metals, and when I look at yesterday and I'm watching the day as it's playing out, and we're looking at silver and we're looking at gold and everything, it is never going to be something where, and it's a great chart because it's never going to continue this run forever. At some point, you have to expect some of these pullbacks, right? And I think that's what we are seeing coming out of silver. And GLD, I would put as far as like how I oftentimes am measuring gold. I do that because of all the option activity that comes out of GLD. It's just absolutely magnificent. But, you know, yesterday, what was the one stock that really stood out for me when we were looking at the unusual option activity? It was when somebody came in and bought 55,000 of the 450 calls in GLD. Well, those were $7 at the time. You know where they are today? 1840. So It gives you a little bit of an idea of, you know, there's going to be some dips, there's going to be some fallbacks and everything else, but there's also going to be a little bit of a rise. And I think what we've watched today with silver, you know, it really got hit much harder than gold, and on that move to the downside. But even today with that, SLV, we started to see another run for that. A couple of thousand, you know, they bought 4,000 of the February 79s. They bought another 5,000 of the September 79s. And then you've got Pan American Silver, which is just a big, huge miner, does a little bit of everything, but silver is what a lot of folks kind of tag to them. Well, shoot, they bought 10,000 of the January 2027s, 10,000 of the January 2028s. And as I said, they had the SLV paper. So, you know what? People are still there and they still have an appetite. And if they have an appetite for this and they're willing to put that on the line, it makes me continue to watch very closely and continue to be a trader within.
Yeah. The category that these belong in now, Pete, after all this volatility, it seems hard to continue to call them safe haven assets. I think that's a good part of the reason how they got here. I think that gold in particular had such good performance across several different macro regimes. It withstood all of the crypto narrative. It withstood even when the Fed hiked. You know, it had a down year, but so did stocks. You know, but at this point, when you've got this amount of volatility, when you have this degree of options flows like you're talking about, maybe this applies even more so to silver than gold, but I feel like we have to categorize these as risk assets. I mean, you know, there's no earnings in gold, but there still is like a valuation to some extent. You know, like it gets murky, but
Yep. Yeah, and people are definitely willing to want to go over there as you know, quote unquote safe haven, but you know, there's more to it than that. I think the biggest thing that separates gold from silver for me is just the absolute usage that so many people are still not quite aware, I don't think, and I think you've done a good job. I'm hopefully doing a good job of spreading the word on silver. Why did silver outperform gold to basically double? I mean, if you go back to a year ago, you look at silver, it's up 163%. You look over at gold and it's up 76% over the last year. So if that's the case, why is silver outpacing it so much? And I think the actual answer is, well, look at how much is used for AI. I mean, silver is an absolute for that. Look at some of the most important chips that NVIDIA puts out there, the high performance chips. they need silver. You look at data centers, you look at medicine, you look at photography, you look at all these things, the EV batteries. So there is so much usage for this, and I think I can use it as a bit of a, something that shows you a little bit about this. If we're sitting there looking and talking so much about AI and hearing so much about names like Micron in terms of the memory and SanDisk in terms of the memory and all the different pieces of that puzzle that we've got, I know one thing for sure. I remember Micron coming out and saying, look, we cannot keep up with demand. It's just a fact. We can't keep up with it. Well, if that's the case, that's actually probably pretty damn good for silver as well.
Yeah, I hear that. I think it's a very good point. I think there are still lots of AI knock-on effects in this market that are underappreciated. To Brent's point, the cloud companies getting obliterated on AI disruption, people being able to code on their own, such an important story. Maybe it's also in the Bitcoin story too, the quantum threat to a new computing basically, and the ability to maybe crack crypto codes or whatever. So to your point, there's an AI impact almost everywhere, and to think it's not in silver, I think would indeed be missing the picture. The other thing too, yeah, go ahead, Pete.
I was just going to add one more thing to that, and just talking about those memory stocks.
Yeah.
Not everything goes straight up, and we talked about that with silver and gold both. But the amazing thing is, it makes some sense that you're going to see some pullbacks. Something's a little bit too far in front of itself. I'll give you a great example. These memory stocks that I brought up. Mm-hmm. Micron's up 48% year to date. Not
looking at
over
it right
the
now.
last year to date, 48%. SanDisk is up 180%. Western Digital's up 64%. Seagate's
Crazy.
up 50%. So, and I'm talking about January and now the second day into February, right? So,
yeah.
Let's just say that things are not going to go parabolic. They're going to pull back for all the right reasons at times. They're going to get a little bit too lofty, and then they'll come back and they'll be starting to buy again. But I find this really, really intriguing of what we're seeing here as it's playing out, and I think it makes some sense. If you and I had bought Micron together or SanDisk together, for goodness sakes, at 180%, I probably would have tapped over to you and said, hey, it might be a good time for us to lighten up a little bit.
Take a little bit. Totally.
So I think
I'm with you.
We're not the only ones who think like that. Yeah.
Well, I'm looking at the chart for STX as an example, and to your point, this is actually exactly where I was going to go, is these charts look pretty solid. I think still by most standards, you're kind of giving like a little bit of an ascending triangle, maybe a wedge, something that I think generally often more breaks upward than downward when you have the type of momentum behind it, and then you go through a period of consolidation, which is what I would describe these charts as right now. Micron, we put in a slightly lower high, but I don't think anything here in these charts suggests major breakdown. The semiconductor ETF SMH resemble this to some extent, but it does have a few days of lower highs and lower lows behind it. But the broader group is going to be a little bit weaker than the stuff that's been super duper hot, which gets to the SanDisk, which gets to the STX. I mean, look at S&DK today. No problem at all. It's just moving anyway. It's still up.
Which is amazing, isn't it? And that's the one that's up the most. So it just shows you that is it nonsensical to some degree? Sure. But we never know when those pullbacks are going to come. And that's why it's interesting to see where does the unusual option activity. You're sitting right there at the Cboe Global Markets. Let me tell you, if I saw the paper coming in like I have seen today, for instance, yesterday was GLD, today was a lot more on the silver side, that's going to give me the influence of what direction I think it's going to go from here, because they're coming down, on a day like this where you've had that pullback, and now all of a sudden the buyers start to come back in, and you start to see a pretty good lift out of something like silver.
Yeah. All right, well, they're still willing to go into it after a 30% intraday drop, so that tells you persistence. Speaking of persistence, we got a big event coming up on the weekend. One last gamble, I think, until I got to change the animation from a football to something else. I don't know, but the American flag is staying, that's for sure. Let's look at Kalshi and let's look at the numbers here. You were all over Seattle as the leading contender, since we started this show, basically. Give me a 60-second thought on the Super Bowl and what you like here, Pete. Right now, Kalshi's got Seattle at 68%.
Yeah. it makes a lot of sense to me. If you look at what's happened in the offseason, not the offseason, but the playoffs, you look at Seattle, you look at how the quarterbacks played. Drake May had a little bit of pressure on him. He didn't play as well as he did during the season, but they still won the games, which is the most important part. Seattle, a little bit different story. You take a look at what Sam Darnold was able to do. He did an outstanding job, and in the playoffs, even better. So I think because of what he looks like right now and because of that defense that Seattle has that I think is a suffocating defense, I put them up there with some of the best defenses. I don't know that they're as good as the Bears, but I think that they're as good as the Ravens and some of the other teams over the past that have gone into the Super Bowl. Defenses do help you win Super Bowl. And I think that if you look at the two of them, I think the standout is absolutely Seattle. They're very, very impressive in everything that they're doing. Great receivers, great running backs, two of them. And I think that's why they're probably sitting in this great spot. It doesn't mean that New England can't have a shot, and I think they could. But it certainly seems to me that I lean very heavy, and I obviously see it in front of me as well, but lean heavy towards Seattle. The one thing is they're going to lose their offensive coordinator once the season's over. And is that going to have an effect this week as they get in closer and closer to the Super Bowl? Because their offensive coordinator is pretty much a slam dunk to go to the Las Vegas Raiders. So
interesting.
Is that going to be a little bit of a something
in the back of their mind?
In the way of anything of right? Yep.
A little distraction. Yeah, not good to have distractions at the table. Great stuff, Pete. By the way, shout out, nice call. I'm pretty sure the first time we did this segment and I asked you about NFL for the year, you said Seattle looked like the best. So you know your stuff. All right, we're learning from the best. Appreciate it, Pete Najarian. Fun convo.
Thanks, man.
Good look at the semiconductors that are winning alongside the metals as well. Pete Najarian, Market Rebellion. All right, 2-minute buffer break from Innovator. Then we are back with Chris Brecher up next.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovator's floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
All right, welcome back to the show here. We got stocks, 21 minutes until the close. The S&P 500 now at 69.12, down 90 bips. It's been a back and forth day, but we are still under pressure. That being said, not too far off from the highs, of course, from a couple of days ago, and a nice little bid basically since we started the show. Let's hunt for some stocks and let's do some trading with Chris Brecher joining us from Trading Nest TV. Chris, what's up? Good to see you.
Hey there. I was going to tell you is the one area, well, I was going to tell you to search AI and look up upcoming IPOs.
Yeah.
And I think that's one reason you're seeing JP Morgan act so well today. Citigroup, they actually came out and said that they are going, Glencore is close to engaging Citi to advise them on a potential deal with Rio Tinto. So I think that's why Citi and JP Morgan are acting so well. I think that's why the Russell is acting well, because so much of the Russell is financials. And I think that's why the ES came back a lot. But yeah, all day they've acted great.
Hey, that's a good point. I hadn't thought about that. I always like you trying to think outside the box. I like that, Chris. It's a good point that when supply is expected to enter the market, that helps explain why some of these cloud stocks in particular are getting obliterated, right? I searched AI upcoming IPOs on Google Gemini, my new producer, and OpenAI, Anthropic, Databricks, a big one. Of course, everybody's wondering about SpaceX, CoreWeave.
Yeah.
I never even heard of Hugging Face. It's a little weird, but okay. So yeah, you're right. I mean, as long as the market doesn't get too volatile, you probably expect these companies to go ahead and go for it.
Yeah, and that just sort of sucks the life out of companion stocks. That's the way I look at it. So I know everybody talks about AI like it's over, this and that. I think it's just really supply and demand and just diversifying your money into the IPO kind of stocks, or anticipating that.
It's a good point.
That's why I think the JP Morgan Citigroup are acting great. And then, like we talked about, well, one thing, and I got to tell you, a big wild card in my
That's
opinion.
Interesting, too. Good eyes again, Chris. Sorry to interrupt, just giving you a shout out. Good eyes again. I missed the bank trade that's really solid today. I just pulled it up. JPM up 2% right now. So, I mean, and coming off support, too, it seems like.
Yeah, and it rallied just now 4.5 points in the last hour. So
Yeah.
I think, you have on the one side, JP Morgan got walloped because of the credit card worries. And on the other hand, you have that, two things. One is upcoming IPOs and them maybe doing the syndicates. But the other is if Warsh gets nominated. Now, that's a big if. That's what I was going to say, is supposedly he wants to shrink the balance sheet, and he's not really a big fan of QE. So on the one hand, that's great for JP Morgan and their trading desk, because it means more volatility. But on the other hand, if the markets go down enough, you just wonder if his nomination gets.
Okay, that's interesting that you think maybe the market's given a reflection here, feedback to the pick possibly.
Yeah,
I mean, I'm on record saying I think that was the biggest risk of the year, is messing with some that ain't broke, taking the Powell out for political reasons. I hate that. I hate it.
Well, but I see Warsh's point that it's very rare to expand a balance sheet during an economic expansion. And so he just wants to keep his powder dry just in case something weakens. But on the other hand, you're right, though. If the bonds aren't crashing, which they're not, and if the dollar isn't crashing, which it's not, why does a big balance sheet matter? I mean, that's the theory, I guess, that Powell has and Bernanke has is, heck, where else are you going to go in the world? And so you're right. If it ain't broke, don't fix it. I mean, I live in the South, so that's a perfect saying. And, but yeah, definitely I see where you're coming from. No doubt about it. And I'm very surprised he's the pick, if you want to know the truth.
Yeah, it kind of went back and forth. I feel like no matter who it is, it's just non-Powell is volatility inducing. Chris, I wanted to get an update real quick. Speaking of some of the political stuff, you still in that Cuba annexation trade? You looking for casinos to go up?
Yeah, it's interesting. We're in win, which refuses to go down today. In fact, it's almost on its high for the day, believe it or not. We're in win and we're in floor. We're not in Vulcan Materials. I wanted to go in that. The problem with Vulcan and the problem with Win is that they haven't had earnings yet, which always worries me when Las Vegas Sands has. And if you look, Las Vegas Sands has really rallied, 5 or 6% the last couple of days after lousy earnings. So I think a lot of this, though, I mean, you say Vulcan Material, it was a lot higher.
Vulcan,
but
yeah,
it's
Vulcan
really hard.
It's a good-looking chart. Yeah, it's a good looking chart. It looks like an intraday dip that might be juicy for momentum buyers in that stock.
Yeah. Look at Floor also. Same thing.
Floor, yep.
Same kind of breakout, believe it or
Floor,
Yeah, and we like that at
47 and a half
45 and a
bucks.
half.
Okay, so you like floor at 45. By the way, LVS2, to your point, a trend there up and to the right as well. Hadn't really appreciated that enough. So, both of the banks and the casinos hanging on. Doesn't seem like it's the end of the world quite yet. We're going to go to Cuba
Well,
to party.
the thing is when I did a YouTube video on crazy ideas for 2026, I was a little more controversial saying U.S. annexing Cuba. But you don't have to annex it. You just want them to have a regime change where they're more capitalistic. So
Fair.
I can be less political and just say, yeah, if they encourage casinos and encourage capitalism.
Yeah.
And,
once the cat's out of the bag, once you get a taste of the good stuff, it's hard to go back to the commie ways.
Well, the other thing, if you want to know another way to do it, because you've seen it over and over of unusual option activity seems to precede the stock price. You saw it with PNR last night. That was the only one I showed everyone had unusual put activity coming into earnings. And if you go into
blasted.
Yeah, look at, so we were actually looking at that. If you don't think somebody had inside information, go look at the trade tab and look at the Fed 100 puts. Look at the open interest and look at the volume today.
Love it. Chris, good eyes, like the outside the box thinking in the specific stocks. Like the bank eyes too, seeing the move up in JP Morgan pretty good today. Appreciate you. Good stuff, Chris.
Hey, thank you for having me on.
You got it. You the man, Chris Brecher, Trading Nest TV. How worried do we need to be if JP Morgan's bouncing off support and Las Vegas stands is still in an uptrend? We got Mr. Scott Bauer to take us into the bell. 13 minutes until it. Stock's been trying to make a push here over the last few moments. About an hour or so of a little bit of a bounce. We'll see if we can close it with a bang. We'll be right back. There are two things about Chicago finance you can't get anywhere else. The first is kind of hard to miss. Everyone's trading options. Cboe is on a 5-year growth streak making billions. And its goddess of grain sits atop the final pit of open outcry. And that's what it's all about. The chance to fend for yourself. A fortress for the self-made trader and the only still standing in America. The second thing you may not know, but it's worth trillions. Chicago is the only major city in America that's home to 2 of the top 10 registered investment advisors, according to Barron's. That means a steady river of passive money and fixed income pouring into the city. If you think you can beat the market, this is where you do it. If you've got value, price will discover you here in Chicago, the future of finance. Join me, Oliver Renick, from Cboe, Tuesday, Wednesday, Thursday, into the closing bell, live from Chicago.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
All right, welcome back. I got Mr. Scott Bauer joining me from Prosper Trading Academy as we head into the bell here. We got 9 minutes left. Scotty, where are we at? We're kind of making a run for it.
We're making a little bit of a run here. S&P's down just about 60 or so. VIX way off the high. We topped out at 2030 today, and we're just hovering about 18. So I think this market is just really on edge. As you know, when we get one of these sell-offs, is it going to go further? Are we going to finally see the VIX break to 22, 23? Are the S&Ps going to break? You know, today, besides all the news this morning and some of the sector rotation and, you know, some of big tech getting hit, it seemed that things really took a turn when that news came out about the U.S., you know, shooting down a drone, an Iranian drone today. And then all of a sudden, everybody's like, okay, is this the start of something here? And then it's really interesting, Oliver, because I've been watching these VIX futures all day. I was just over in the VIX pit. And as quickly as it rose, that's as quick as it came down, as soon as we're seeing a little bit of a rally here. So I'm going to say overall, there's still not a lot of concern, at least from out here and maybe from some of the institutional paper. It just doesn't seem like it. And I will tell you, when S&P's midday-ish were trending towards their lows, and there were some buy orders that came into the S&P pit here, the traders on the floor couldn't sell fast enough. Meaning, to me, they were probably loaded up on premium and really wanted to get rid of it.
We're ready to bail as soon as something hit. To your point, pulled up VIX futures here. You know, the move down here just in the last hour, pretty substantial. Same thing through yesterday's session as well. Early pop in VIX, then crush. But there's definitely some jitters, right? But like when I look at, say, gold and silver, you know, these charts over the last week are not safe haven charts. So there's risk appetite, I think, showing up in the fact that they're getting bid. The fact that move from silver last week didn't scare people out of it.
Nope. You know? No, I mean, all it did was add more volatility, more uncertainty to that market, and I think made the casual investor say, oh, it's not so easy, right? You can't just buy into this and hope that it goes up. There is really maybe a more macro theme to why these things are moving the way they are.
Yeah. The macro theme that I think you bring up, which is important, I always like your macro take. I think underappreciated also in the narrative is that yesterday we had a nice print from ISM Manufacturing, which is a rare thing, obviously.
Yeah,
for those
hasn't happened in a while.
Yeah, exactly. I mean, the fact that we hit above 50, who knows if that's going to hold? But I think to some extent that kind of speaks to this notion of the metals being representative, this kind of physical, kind of industrial rebound happening as we got to build out all this stuff for tech.
It sure seems like it, whether it happens all at once or happens over time. I mean, that certainly seems where we're going with that. But, you know, that's one print, right? Let's see if that sustains itself. If we get another one next month, another one the following month, and those numbers are better than 50, okay, maybe we're onto something there. And then what we have seen in the metal space, maybe it's a longer-term trend than just, I don't want to call it a fad, but almost that's the way it's trading right now, right? Exactly.
You know, it has.
Exactly.
I think in some ways has complicated the case even further for crypto because, as Alex Kaufman, my old colleague at Schwab, used to say, Bitcoin is a volatility instrument, just the way same way that we've talked about it before. as a risk instrument, but some people, view volatility as a separate asset class. And so if you've got something like silver or gold that's offering volatility and general trend upside, that's better than something that's just offering volatility and trend to downside, which is what Bitcoin's been doing.
No doubt about it. And, there was so much talk. I want to say it was yesterday. I think it was yesterday morning. Tom Lee came out and said, "Oh, the bottom is in." Kathy Wood came out and said, "The bottom is in." Yep. Right? Do they really know? What do they know? I mean, look what happened today. Are they talking their book? Yes. They're talking their book.
In terms of who we know generally has, a book.
Yeah.
Yes, it's hard to figure out, right?
For sure.
Positions are stocks like Coinbase, which are a big part of the ARK fund.
MSTR.
4.5%. Of course, strategy as well. MicroStrategy, as I call it, down to 133.
I mean, that's
totally disappearing before our eyes. And now we're below the break even for that. And I hate to I don't hate actually because it was
you shouldn't hate it, and you should take all the credit in the world.
Well,
we've talked about that.
The other thing too, though, that is how hard was it to see in 2024 election that the government was going to be a buyer of Bitcoin? And this got rug pulled again because now we're below where Bitcoin was when Trump got elected.
Big time.
And I think that's really important. What did they do? They didn't establish any treasury.
Nope.
They issued ETFs.
No.
Or they dropped. The coin drops.
No.
Melania coin. They sold.
They
sold coins.
They're the ones that benefited. Right? Bottom line, they're the ones that really made out on this.
Coin or whatever,
I don't even know the names of them.
They were ultimately not buyers. They were sellers.
They were sellers. And it was I don't know if it's the ultimate rug pull. It's a big one. And it's going to happen again. We're going to see something like this happen again. Bitcoin now just hit its lowest point since November of 24.
Exactly.
So anybody that says that, and this is not being political, okay, this is just cold hard fact. President Trump said, it was either yesterday or Sunday, that nobody has done more for crypto than him.
Sure.
How do you substantiate that?
Maybe from a regulatory standpoint and putting it out there.
Do you think that's what he's talking about?
Well, what he's talking about is trying to get they put a lot of money in, obviously.
Yeah.
So there's a lot of donors there. Where in terms of facilitating the dialogue, I went to the Bitcoin conference in Vegas last year, and they were front and center in terms of pumping it, right? So what they did was they did what everybody's always done in crypto, which is pump it up.
Yep.
Now, did he pump it up, more than any other president? Sure. But did they buy any? Did they do anything to integrate it? In terms of price? No.
I don't know. So, going back to the safe haven, going back to risk assets, what do you do here? You've got gold and silver, throw out what's happened over the last couple of days. That uptrend, that massive rise, still there. That trend is still there. But in the world of safe haven trade, in the world of risk off, we're supposed to see bonds rallying, not bonds selling off.
Great point.
Right?
Glad you bring it up.
And we are seeing bonds still, maybe they're not selling off hugely.
You're right. They're not rallying.
They're not rallying. In fact, we saw the 10-year hit 430 today.
Correct.
The highest in several months. So, there's definitely some disconnect out there. And that just tells me that even the master pros in the world are probably a bit confused at where a safe haven might be right now, which is why a simpleton like me just goes to the VIX or the S&P.
Correct.
And trade something that I know is actually tangible.
And you can see the math in
and
front
I
of
can
you.
see the math in front of me.
See the math in front of you.
You got it.
You know what your downside is.
That's right.
How to structure things if you want. You can create your own. This is why the buffer funds are so popular.
Yeah.
Shout out Innovator.
There we go.
Because what they're doing is options trading on behalf of people.
Sure.
Simple, straightforward options trading. But that's the whole point of it, is you can construct these things that are very specific. But to close on that point, Scott, because it's an important one that's worked its way into the coverage today, is the 10-year chart. Nobody bought bonds today.
Nope.
Despite crypto getting hammered, despite stocks under pressure, which tells me that if any of our economic data come in strong or the market firms up, it seems like we keep selling bonds.
Yeah, and someone pointed out to me today, the market doesn't like uncertainty, and that's kind of why we see volatility. But the new term, and it's not a new term, but the term that should be used is the market doesn't like unpredictability.
Sure.
Meaning unpredictability of what's going to happen now, what's going to happen in the next hour, what's going to happen at 4 a.m. tomorrow, as opposed to the uncertainty of maybe a government shutdown. We're in this world again where literally we can get news at any time during any day that affects the market. And I think that's kind of the trade that we're seeing right now.
Tomorrow and the next day, there's not a lot in the way of economic data. Maybe the ISM services tomorrow could be some action, especially for bonds. Love that point on bonds. Great to have you, Scott Bauer.
Thank you.
CEO of Prosper Trading Academy. All right, we heard the bell. That was it. What are we on for S&P 500? 69.17, about where we began our conversation. So not much there at the close, but still nice little bounce off the lows of the day.
40
Scott,
points.
bring it home for Chicago Future of Finance. Have a great night.